Welcome to a presentation of Hypoport, and I hope I can get you interested in Hypoport in the next couple of minutes. Yeah, what is Hypoport? We are an ecosystem of platforms which is digitalizing three core markets here in Germany. We are digitalizing the credit market, the housing market, and the insurance industry here in Germany, and this for the last 20 years. When I say we are digitalizing and for the last 20 years, you're looking here on a growth company with a long time organic growth track record. We are growing roughly 20% for the last 20 years, top and bottom line. For the last 5 years, we were a little bit more focused on top line growth. You see an average of 25%. So to use the current market environment to set new standards and gain market share while investing heavily in R&D. So bottom line, EBIT growth roughly 15% over the last 5 years. We keep reinvesting the whole profit into our business models. So this what we show in the P&L is under the condition that we heavily invest in R&D already. So roughly a similar amount like our profitability goes to R&D. Plus we heavily invest as well out of our balance sheet, especially at acquisitions. So the last 5 years, more than 10 programmatic acquisitions, small companies that we integrated in our network to expand along value chains here in Germany. So now you heard already a lot about companies. Hypoport is an ecosystem of more than 20 companies, a dozen larger ones, which are operating in these three industries. And each of them is usually integrating different market participants on a platform to enable them to exchange transactions with each other and grow based on this exchange. Typical business model is that we are transaction based. So you pay for a successful transaction. Out of this, we generate revenue. We group this for easy understanding along these three industries. So you have a segment for credit industry, you have a segment for insurance, and you have a segment for the housing industry. Plus our own, you can call it B2C business, where we run a franchise network as a fourth segment. Largest is the credit platform with 170 million in revenue last year. Second comes the mortgage franchise network with 122 million. Our growth segments, housing and insurance, are a little bit smaller, but have a huge potential in front of them. You will get to know this in a couple of minutes. So we start to understand Hypoport based on the activities in the credit platform. So the core here is our, in the last 20 years, developed market position in the mortgage market, where we integrate the consumers, the advisors, and the lenders on one single central platform. You can say every fourth mortgage in Germany is transacted through Europace. And this is independent if you are a mortgage advisor or if you are a bank branch, you are using Europace for the best process and the best product for your consumer. Lately, we expanded to personal loans and integrate them along the value chain, and corporate finance as well with the funding part platform, which is just launching right now. So step by step, we digitalize on a platform, on a marketplace, the different credit products here in Germany. I told you already, we talk about this, that each fourth mortgage here in Germany is transacted via Europace. The last 15 years were a constant growth track for the Europace platform, while the overall market is more or less stable. It was growing as well from something around 180 billion to 300 billion in mortgages. But you can see that Europace is just taking market share and keeps, let's say, keeps getting more and more dominant in this market as a central infrastructure. When we talk about this market, we can look on the 4 different segments where Europace is having a major role in this market now. First are the mortgage brokers, the independent advisors, where more than every second mortgage is transacted using Europace. We are incrementally growing within this market, replacing offline connections of brokers to local banks especially, plus replacing let's say outdated single lender applications of some mortgage lenders here. and the business is transferred to Europace. In addition, the mortgage brokers take market share from bank branches. So they are growing as well. And with them, we are growing in this 300 billion market here. In the private commercial banking sector, market share is roughly 40%. So more and more of the larger German high street banks are using Europace in their branches to advise their products, sell their products, plus have the ability to use third-party lender products if the own product is not competitive or doesn't fit, or the credit hunger of the balance sheet is limited in a certain moment. Here are just a couple of banks left, which we still need to convince to finally migrate to Europace. We expect this to happen in the next 10 years because there is just no alternative on using Europace compared to their more than 20 years old systems, and there is no competing platform or a software offering which has a similar efficiency like Europace has. So, and then there comes the two large banking sectors here in Germany, 900 cooperative banks and more than 350 savings banks, which represents more than half of the mortgage market. In both markets, we grow now for the last 5 years on their sales side. So by creating them and their sales organization and sales channels step by step to Europace, we reached over the last years in both sectors roughly 12% market share currently. And you see on the right side of the screen what dynamic it has over the last years. So in the savings banks industry, it's a steady process where we already for 10 years ago teamed up with the sectors and step by step migrating this saving banks and their branch networks here. Average speed was pre-Corona 50%, slowed down a little bit during the Corona crisis because these organizations were heavily impacted by Corona and had to close branches temporarily. So let's say our dynamics slowed down as well. Huge chances after Corona when these branches are all reopened and everyone learned how important, even in a traditional branch business, it is to be fully digital with your consumer. And on the cooperative banking side, we had a new joint venture created in 2018, the core participant of the cooperative banking sector. And this accelerated the growth speed. The last 2 years, we more or less doubled every year at the transaction volume of the cooperative banking sector and the migration speed of cooperative banks to the platform. The end game here is that we expect more than 80% of the German mortgage market to be united on our platform, to be transacted through Europace. And looking forward, beside this scaling of the business, we see a huge potential in the mortgage market to automate further, automate the advice process so that the consumers faster and better advised using artificial intelligence for the choice of the right products. And less and less human work is needed. And with this potential to increase as well our part in the value chain and our commission out of this business. And on the other side as well, automating the credit decision process of the lenders to the point that not a human being is slowing down the process anymore, how fast a mortgage application is underwritten by a bank. We dream of a process which takes milliseconds to approve a mortgage for a consumer. And we are going to bring this here to the market. So scaling it to 80% plus expanding our footprint in the value chain, just when you look on the mortgages, is our track going forward. Next business heavily linked to the platform, Dr. Klein. We are operating here a franchise network of 230 branches where our core business value is that we generate leads online for consumers who are interested in the mortgage advice. We are heating up these leads digital, so stay in contact with these consumers to the moment when they really need the personal advice, and then matching them to the perfect franchisee, which is based on, let's say, distance and social skills of the franchisee. The franchise system is using Europace to transact the mortgage, to advise on this. Dr. Klein as a brand is using its buying power to negotiate deals with the product supply side on Europace. Dr. Klein is growing similar speed like Europace. The CAGR of the last 5 years, 90% in an overall only slightly growing mortgage market. Core bottleneck here is still the numbers of advisors. We in these 230 franchise branches, there are right now more than 600 advisors taking care of the leads which are generated by the central brand, and the advice process is more and more automated using Europace, but you need this human touch point to the consumer for this lifetime decision, which still is here in Germany to buy a property and take a mortgage. Looking forward, Dr. Klein will scale with additional advisors to increase the resources in advice capacity, but as well will decouple from this process when Europace is automating the advice process further. So additional growth just from additional automation, plus in the moment when the human advisor is for simple mortgage transactions and educated advisors, not educated consumers not needed anymore, that in this moment Dr. Klein will be able to scale just based on more advertising money spent, and the complete transaction will go through Europace. It still stays a very important advantage in the competition with others that there is a branch network, and that Europace will be able to hand over to a human advisor in the moment when it recognizes that the probability of a successful closed mortgage is dropping with a certain application and a certain consumer. That's why the threshold for other organizations to compete, even in a world where not every mortgage is transacted via humans anymore, is high. And this hybrid model, which Dr. Klein is able to offer based on Europace, is still keeping to be competitive and has a competitive advantage. So beside digitalizing the mortgage business and scaling Europace and expanding our footprint in the mortgage value chain, we decided to go into housing and how home ownership and the transaction for homeowners looks like here in Germany. We expand along the value chain of home ownership to the transaction side, using FIRE system as a platform for real estate agent, and to the property valuation side, using Value AG as a platform to automate the valuation process. You need a valuation for the decision of the buyer. You need a valuation for the mortgage, especially there it's a regulatory issue. So these three pieces of the value chain are highly linked to each other, and we keep integrating them to make out of them a single highly automated process going through 3 of our platforms. So we use our strong position in the mortgage market to expand in both directions of the value chain, if you want to say so. We see that the total transaction time right now is still too long, and that there are so many frictions in this because of the lack of digital integration, that we can establish a system using our 3 platforms and create an ecosystem which is pretty sticky and creates a huge advantage for the consumer when you look on efficiency and a speed of the transaction. Beside this, and this is the next growth vector, for the last 7 years now, we expand as well to the insurance industry here in Germany with the same mindset that we want to integrate consumers, advisors for insurances, so insurance brokers, and product supply side on a single digital infrastructure, so that every new insurance underwritten and every existing insurance and the information which are exchanged along the value chain is transacted through our system. Smart Insurtech is operating in a huge market. More than 200 billion in premiums are there to be digitalized, millions of contracts, and we are in a process of step-by-step migrating them and this market on our system on Smart Insurtech, and using the increasing power and leverage that we have based on the data to establish fully automated services along the value chain of insurance. This is a huge market. 40% of this market is already dominated by insurance brokers. And within this market, Smart Insurtech has a market share right now from roughly 3%, which is already fully digital, fully integrated, and plus 8% out of software companies and out of legacy systems, which we control, and we are able to forcefully, step by step, migrate on the Smart Insurtech platform. These 4 business models create a dynamic, growing company. For the last 20 years, we are growing more than 20% every year. We are scaling businesses, we are innovating businesses. So beside this, what you see here as the profit numbers, we are heavily investing in the future. So just in the first quarter, 20 million in EBIT, plus another 10 million in R&D is spent to keep this growing organism and the growing ecosystem of companies. Hope I got you interested in Hypoport. This year, we will get somewhere close to 500 million in revenue. So we are relevant already in this market. More than 2,000 people are generating here innovation along the value chain. We are profitable. We keep growing our profitability. So hope to see you and see your investment in Hypoport.
Hi there. Since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.